So thank you so much for joining us here on this webinar. We are thrilled to have you here, and you're obviously here for a reason. So you want to know where to get started, and you've probably already been looking on realestate.com like most of us do on a regular basis. So you've already started your window shopping, so to speak. But this is going to be the biggest transaction of your life. So we want to make sure that you're not feeling overwhelmed through this process. So to do that, you kind of need somebody that you can trust. And we're here to give you the tools and the tips that you need so that you can buy the right property for the right price. We want to make sure that you are going to be irresistible to the banks and just make it simple. Just give you a step-by-step formula to follow that's easy. So who are we? Well, I'm Lisa Stafford, and I actually come from a real estate background. In fact, I'm a licensed real estate agent, and I started at the backbone of real estate in admin, and I worked my way up, around and through every single department that there is in real estate. So I have seen everything, and I've got a really solid knowledge base. So I've got a little bit of a slight advantage to most people, which is fantastic for you, believe me. So look, I got to the stage where you know, when I was in sales, the one thing that stood out to me was that there was a real gap in the level of service that was being provided to buyers. Because you see, as a buyer, this is probably the only time where you're actually not the client. So let me explain that. In real estate, the seller is the client, not the buyer. I know, it just doesn't make sense. So look, I knew that there was a way that I could actually use my experience and my knowledge to help people who just really don't know what they're doing. And so I created my business as a property advocate. So I've spent the last 5 years researching and developing a program that will guide and support my buyers through this experience and save them so much stress and confusion. I want to teach and empower anyone who needs that professional approach when they're buying property so that they can buy the right one at the right price. Look, I love what I do, and I just hope that my passion and my energy can be transferred through to you so that you can actually enjoy buying the home of your dreams.
And your first home, that's exciting.
Yeah, exactly.
I'm Lisa Wilson. I run Finance and Heels. I have a banking and finance background. I work for the bank. I've been in it for about 20 years now, so I'm very good at the credit structuring and application-wise. But the reason I left the bank was because these beautiful clients that I had, I knew that they needed another product that ANZ didn't have, so I had to put them in something that probably wasn't that suitable for them at the time. Now, being a broker, I have access to a huge panel of lenders with all their full product suites and great competitive rates, which means that I can actually tailor something to that individual's need rather than putting them in something that's not necessarily right for them. So that's a little bit about me. Before we get started though, we've got some housekeeping. This webinar is being recorded, so if there are any little nuggets of gold that you would like to re-watch, you will be emailed a copy and be able to re-watch like you do Friends or Seinfeld. Or maybe that's just my age bracket. We will also be taking any questions at the end. We've left some time, so if you've got questions that are burning, please chuck them in the chat box. You'll see there's a little thing down the bottom that you can pull up your chat box and put any questions in there, and we'll answer them towards the end. We'll also be sending out a copy of all of this so you don't feel like you don't miss out on anything. And we'll put some notes in the chat box as well. So if you feel like we're going too fast, because I may be known for speaking a little bit fast, there are comments in the chat box so you can kind of keep up if I rush it too much. And otherwise, sit back, enjoy your lunch while you listen to Lisa start us off on how to start buying in the property market.
Yeah, thanks, Lisa. You know, it's funny, isn't it? Because when we start to look and consider buying a property, probably one of the things that we miss or that we don't think about is one of the largest components about buying a home, and that's the emotional side of buying property. And trust me, this is sometimes missed because you're not only buying a home, you're buying a lifestyle. So it's really important that you understand that and, yeah, you can deal with that. Did you know that 44% of buyers, that's almost half the buyers out there, actually spend more than what they were prepared to because they like the property, okay? So I want to, I guess, give you the information that you need so that you can think a little bit more logically as well. Look, I know it's important that you fall in love with the home, and yes, that is a very important part of it, but you also need to look at it logically, okay? The next part is to identify who the key decision makers are. Now, I know that you've got, you've got really well-meaning friends and family that are all going to, give you some advice and recommendations and everything, but it's important for you at this point in the time to work out who the decision makers are and what's important to each of those decision makers. So I'll give you an example of this, and I'll be a little bit stereotypical, if you'll allow me. Okay, we've got a guy and a girl who want to buy a property, and the guy walks in and he's more interested in the garage. He just wants somewhere he can park his car and put his tools and maybe have a beer with his mates after work, and that's his little spot, The girl, on the other hand, is probably more interested in the kitchen space and, where the sink is in comparison to the fridge and the stove and that sort of thing. Now, separately, they probably don't really care about the other person's thing, but they need to, all right? You need to have a really clear understanding about who the key decision makers are and what's important to them. And then you can work out what you are prepared to compromise on. Now, as a first home buyer, you're probably not going to be in a position to compromise on price, okay? But location is something that maybe you might be able to compromise on. Bedrooms, how many bedrooms you're going to have, how many bathrooms, how many living zones and where they are, the kitchen, the car, garage space, levels, whether it's a double story or a single level home. So these are all things that you need to discuss and work out at this stage of the game, okay? It's going to help later on. The next part is the region or location. And this is really important to work out what's going to suit your needs and what's going to give you that lifestyle that you're actually wanting. So does that mean, proximity to work, like transport, parks, schools, shops, or maybe it is your family and friends, you want to be close by to them. So these are all things that are really important. What I recommend you do is explore those areas that you're considering just to get a general feel. And you can actually do this online. It's amazing what we've got capabilities of doing these days, but there's a really helpful tool and it's realestate.com if you don't already know. But that's going to show you, and I want you to look at this, and this is what I want you to explore a little bit deeper. The demographics. So who are the people that live in that area? What's the lifestyle? What sort of homes are in that area? It's going to influence who lives there. So take some time to do this research. Also, it's going to give you a really clear picture of what the median house prices are in that area, the supply and demand, which is really important, and a trend in the price in that location. So is it kind of staying level? Is it going up or is it going down? These are all things that you need to be aware of. And not only that, it will also allow you to see similar places to compare it to. So, for example, you might be looking at Richmond, okay, in Melbourne, a suburb in Melbourne, that you love that location, that lifestyle, but you just can't quite afford to get into that market. So with this tool, you can actually see what other locations are similar to Richmond that you can, be either cheaper or more expensive. But it gives you that ability to do that little bit of exploration that when you really, really need to. The next thing is understanding how to read a floor plan. Now, this is really good because what's interesting here is there are so many people that actually don't know how to read a floor plan. And when you're looking at real estate floor plans, what it is, you're looking at it from the perspective of, okay, there's the home, the roof is being lifted off and you're looking down on it. So what I want you to do is practice like visualizing that as if you're walking through the home and try to visualize the space and the areas that floor plan allows. Okay, so start at the entrance and maneuver your way through. Just get a feel of the layout of the rooms and where they are, and you'll be able to, like, the more you do it, the better you'll get, I promise you. But you'll be able to see where the stairs are and where the windows are and where the doorways are. You just need to take all those things into consideration. So with bedrooms, the size of a bedroom can play a really big part. And this is going to save you a bit of time. When you're doing this research, just looking at a floor plan, you're going to be marking off properties that just aren't going to suit your needs if you can do this. So generally speaking, a decent size, or the minimum bedroom space I would consider as being a bedroom would be a 3 metre by 3 metre. Anything below that, or less than that, is a little bit of a compromise on bedroom space. So when you're looking, and I know that this can happen in real estate, some floor plans or some properties that they'll put a bedroom in, it's not a bedroom, it's a study. If it hasn't got a wardrobe and it's smaller, if it's a 2.5 by 2.7, it's going to be tight, particularly if you have to put your wardrobe into it. So just be mindful of that. Another really helpful thing I can share with you is ceiling heights. So, well, how can you tell a ceiling height from a floor plan? Well, you can't, but if you look at the images online, you can probably, look, the standard ceiling height here in Australia is 2.4. So if you look at the doorways, normally a doorway is 2 metres and 40. So I'll give you an example. Like, I'm 1.64, 164 centimetres. So if I put my hand up like that, I know that with my hand stretched up that high, that's around just over 2 metres, okay? So when you're looking, that's a really helpful tool, by the way, like, your own measuring tape. So if you walk into a house and put your arm up, that's, if you're like me, that's about 2 metres, so that's helpful. But you can visualise, looking at the pictures, the images online, and give you a gauge of whether the home's got 2.4 ceilings, 2.7 or 3 metre ceilings, which would be a little bit more desirable because it does allow that extra space. So there's a handy little tip for you as well. Another thing that you can look at when you're reading a floor plan is the orientation of the house. And what I mean by that is, which way is north? Because that's where most of your natural light is going to come from, okay? If your living spaces are facing north, you're going to get that natural light all year round, okay? If it's facing south, on the other hand, there may be a little bit of a compromise on natural light. And there's ways around that, but, it's just going to give you a clearer idea of, the ability to get the natural light in the home, which is really, really important, okay? Now, the next component is budget. And, look, if you've already started saving and you've already got a deposit, then you're well on your way. But you need to understand how much you're going to be able to borrow, and not only that, how much you're prepared to spend. Because whilst the banks might tell you a figure and, the lenders might say, all right, this is how much you can borrow, do you want to spend that whole amount? And keeping in mind that there are other expenses and other costs that are involved in purchasing property. And, you may not even know this because you've never done it before. So we just want to make sure that you understand everything right now. I'm not saying this to scare you, okay, but you've got your conveyancing fees, and what that is you've got like a legal representation that can look up through all the documents and do your due diligence, which is the research on the property, and also making sure that everything goes smoothly through to settlement. Okay, so you need to pay for that service from a conveyancer or a solicitor, and that can range anywhere between, let's say, $500 or $800 to $1,500, depending on where you are and what your solicitor is going to charge you. The next thing is, like, I would always recommend getting a building or a pest inspection, and that's just going to eliminate any issues that may be there, and just give you that, I guess, insurance policy when you're buying a property, really. And that can range anywhere between $500 to, $1,000, $1,200, again, depending on where you live and who's going to charge what. The other thing is, and I don't want to scare you, but you've got the adjustment costs at settlement. And what this is, okay, say, for example, the house that you're purchasing, the council rates and the water rates have been paid for the whole year, and you buy it and you settle here. Well, you've got to pay the amount from when you settle to how long it's been paid up to. So that amount is adjusted at settlement. So you don't actually have to pay that, but it gets adjusted with all the money, and it's, yeah, but you need to allow for that, okay? And look, there's also lenders can charge, you've got your mortgage fees, your transfer fees, and lenders can charge for, they can even charge for doing a valuation on the home. So it's really important that you have that someone you can trust and that professional advice, and there's no one better than Lisa Wilson that can help you through that whole lending fees. Lisa?
So the first question I usually get asked as a broker is, what can I borrow? But it's like saying, how long is a piece of string? So today I want to get into the nitty gritty of how to make yourself look irresistible to the banks so you can borrow the best and most amount that you can afford. So unlike our parents who years ago had to get dressed in their Sunday best and go to the bank and present themselves to the bank manager, we're now presenting an application of you on an A4 piece of paper. So there's no human involved in it anymore. So we need to make sure, so basically the banks don't know whether you're the humanitarian of the year and work at the soup kitchen, or that you're really passionate about buying this property and that, you know, or what your circumstances are. They don't know. There's no human in it. So we have to present the best version of you on a piece of paper. So I'm going to go through like your banking school report basically. So just like school, if you got an A, you had more options available for universities, or your employment prospects may have looked better. Banking is very much the same. So if you were to get an A+ or an A in your banking report, you would have the access to a huge range of funders, their full suite of products, and the most competitive rates in the market. If you were to get a C, your access to funders would be reduced, and some of those products might not be available, and the prices might not be just as sharp as what you would get if you're an A+ student or banking student. And if you're an E, there's still banks out there for you, but they're non-conforming banks. So they usually charge a premium to offset the perceived risk that they see with your overall banking profile. So the stuff that I'm going to go through today looks at the A-rated and how we can get you to there. But having said that, there is still lenders out there for your individual circumstances that even if you aren't A-rated. So just be mindful that you're not being excluded or precluded from getting finance. It might just not be that you have the same access and options available. So the way the banks assess their banking scorecard or report card is the 5 C's of lending. And these are your character, your capacity, your capital, collateral, and conditions. So I'll start with the first one, character. Now, character refers to your credit profile and your reputation or track record of repaying debts. It's one of your most valuable assets that you probably underrate the most as well, in terms of that it tells the bank whether you've got stability or continuity in your employment or where you live. It also informs the bank of your past payment history and whether you've made all your repayments on time for your credit cards, your car loans, personal loans, and any bills, because now we report on your bill payment history as well. So your past credit character is viewed by the banks as a really strong indicator of what your future credit character will be like. So making sure that your credit file is in mint condition is a really good place to start. Now you can download a free copy of your credit report at the Money Smart website, which is a government website. We'll put the link in the chat box. There are 4 credit reporting agencies though, so it's a little bit of a task to download them all and request them all. But the 4 agencies are used by different banks. So until you know which bank you're going to go through, you don't know which credit report to do, so just do all of them. And the things that you want to check for is to make sure that there's been no fraudulent activity on your report. In COVID times, these are getting a lot more technologically savvy. You want to make sure that there's no credit queries on there that you haven't actually applied for. And you want to make sure there's no defaults or bills that you haven't paid that you've just missed, because it does happen. So just make sure that it looks okay, basically. And you can do this once a year, and it's a free report through that Money Smart website. So take advantage of that. But in the lead up to, so my tips for, in the lead up to applying for finance is to try and make sure that you pay all your bills and credit cards and loans on time, that you don't take out any unnecessary credit applications, and to get a copy of your credit report to make sure that it is actually how it should be. The next C is capacity, and capacity is your ability to repay the loan, which is basically how much can I borrow and what can I afford to borrow, more to the point. Because sometimes what you can borrow is a lot more than what you can actually afford to keep eating. So this is your income less any expenses and liabilities, and the surplus remaining at the end of that pay period is basically what the banks will use to service that loan. So banks generally request your bank statements now, usually 3 to 6 months, and they will actually trawl through there looking for those recurring expenses like gym memberships, newspaper subscriptions, TV subscriptions, afterpays and zip pays that we might not have disclosed or just forget about because they're just automatically debited from our account. So my advice to you is in the lead up to applying for finance, and 3 to 6 months out, that you limit any discretionary to spending. So, maybe not so many smashed avocados or green smoothies for Beck and espresso martinis for Dora. Limit those and close any unused credit cards. And if you can't afford to close your credit cards, as you pay them down and reduce that debt, potentially lower the limit on them because that will impact your borrowing capacity as well. The next C is capital. So this is how much skin have you got in the game? How much of a deposit have you actually saved? And ideally, banks like to see a 20% deposit plus costs, which is, these days with house prices the way they are, it's practically unattainable at times. So, and we'll get to grants and concessions later. So in the event that you can't save 20%, so say you're in a position where you're renting, this is where you want to have a really good savings history. So you want to make sure that you've genuinely saved at least 5% deposit. And when I say genuinely saved, I don't mean your tax return refund. So you get a nice little refund check and you put it in your account and then you go, oh, I might be able to afford a deposit on a house now. The banks don't see that as a genuine savings history. So we want to see regular savings contributions each pay period. So that consistency and regularity is really important to the bank. They also use your rental history. So if you are renting, make sure that you pay your rent on time because they will request a statement of that if you are using 5%. A bank who sees a regular savings history is always going to offer better products and services than someone who has saved the 5% and uses the first homeowners grant. So my advice to you in terms of the capital component is to save and make sure it's regular and consistent. The next C is collateral, and this is basically the property that you're purchasing that the bank will use as the security, they use it if you were to default, they can sell the house and make sure they get their money back. Now, the property you choose will depend on and have an impact on which banks you can use and which products are available to you. So that's dependent on various things such as the postcode that you've got purchase in. It could be whether it's an apartment or a freestanding house, whether it's residential, rural, and what the purpose might be. So I would advise you in this respect because one bank's yes is another bank's no and vice versa. So get advice on this one. So speak to either your buyer's agent or to your broker and they'll be able to let you know whether it's acceptable to the bank that you're looking to submit to. And the final C is conditions. Now this refers to the purpose of the loan. So are you going to use the property for owner-occupied purposes or is it an investment property? What are the prevailing rates? So will you use fixed or variable rates or principal and interest only? They're the ones that you can take into account and they will basically, the bank will assess those against your overall risk or banking report. So trying to structure it to meet the appetite of the bank is really important. There are other conditions too that are outside your control, such as legislative changes, industry trends, economic issues, and currently the pandemic. So you'll find that anyone who is in a hospitality or tourism role at the moment is probably finding it really difficult to obtain home loan funds just because the pandemic has meant that a lot of their businesses and income has been impacted. So they're the conditions and how they can impact you. So ideally, from a owner-occupied perspective, from a first-home buyer's perspective, you're more than likely going to buy a property for owner-occupied purposes. So principal and interest might be a great way to present it to the bank. So then you're building equity from the start as well. So they're the 5 C's. Just a quick recap of those tips would be to make sure that you check your credit file out annually. Don't apply for unnecessary finance. Aim for stability and continuity in your employment and where you live in the lead up to applying for that finance application. Reduce the smashed avos, the green smoothies and the espresso martinis, or make them at home at least. Close unused credit cards and reduce credit limits where possible and limit those afterpay and zip pay facilities where you can. And save very regularly and consistently. Doesn't have to be huge amounts, just try and save. And check with your broker on the suitability of the property or your buyer's agent for the suitability of the property type that you're looking at, and structure your loan so it is favourable to the bank that you're looking at. Now, grants and concessions. Now, these are really, really specific to each state. I'm going to focus on Victoria today. The first one being the first homeowners grant. Now, this is a grant for first home buyers, obviously. So all of these apply to first home buyers. So I should say that a first home buyer is someone who has never owned property before or lives with someone who will be on the loan or the title that has ever owned property before. The first homeowners grant in Victoria is $10,000 for metro, $20,000 for regional. It is open to Australian permanent residents on new properties. And a new property is classed as a property that has no older than 5 years of age, and no one who has previously lived in it has taken up the first homeowners grant, because if they have, you'll be ineligible based on the actual property having been used for the first homeowners grant before. Okay, that's the first one. The second one is the principal place of residency stamp duty concession. This is an awesome one because it applies to both established and new homes. And it means that if you purchase a property up to $600,000, you will save yourself $31,000, because that's how much stamp duty would be on a $600,000 property. If you purchase one between $600,000 and $750,000, that stamp duty discount will decrease on a sliding scale and will cut out at the $750,000 point. Now, the difference with this one is that it's only available to Australian citizens. But again, it is available for both established and new properties. So that means a lot more people will be eligible for it. The next one is the first home loan deposit scheme. And this is a new scheme that was introduced in January this year. They announced 10,000 places, of which have all been allocated. So on the 1st of July, they announced a second 10,000 lot of places. It is only available through selected banks. CBA and NAB are the two big four banks that have got it, and there are 30 other littler lenders that also have access to it. CBA have already exhausted their allocations, so we're now down to NAB and the other little banks. And what this does is those people, particularly those people who are renting, and when it's really hard to save, but they've got about 5% and they're eligible possibly for the stamp duty concession or maybe a first home buyer's grant, they can actually purchase a property. So say they're borrowing a house for $100,000, they can borrow $95,000, and instead of being slugged with loan mortgage insurance or LMI, the government will secure 15% of the funding, so they don't get whacked with that large LMI insurance cost expense, which is awesome. It can save anywhere between $8,000 and maybe $20,000. So it is only available through select banks. Again, it's only available to Australian citizens, and it's a great way to get into the market, particularly if you're a renter. You still borrow 95% if you've got a 5% deposit, but the government secure that additional 15% for you, so you don't have to pay that LMI expense. And there is another one called Home Builder Grant, which has only really been announced during the pandemic. The final details haven't been issued yet, so we're not sure whether you'll be able to use it as a deposit or whether it'll be provided during the build. But just quickly, it is a $25,000 grant for people who are building, who sign a contract between the 1st of July 2020 and the 31st of December 2020. It has to start the build, so the build must commence within the first 3 months, which is a really tight time frame. So you might want to make friends with your builder to see if they can make it happen. And as I said, we don't know exactly how it's going to be administered yet. So that's something we'll look out for on Treasury and can let you know if you're interested. Like I said at the start, these are very specific little tweaks that would be specific to individuals, and we need to tailor it to you. So if you need to know more information about any of the things that we've spoken about today, and your overall banking profile report and grants and concessions, because there will be a bank out there for you more than likely, it needs to be tailored to your individual needs. So that's the grants and the 5 C's of lending to make you look very attractive.
Yeah, that's great, Lise. And like so much information there, and it may feel a little overwhelming because, you know, if you've never done this before, but that's why we're here. So look, we've actually put together, Lisa's put together the Ultimate First Home Buyers Guide, which we're going to include for you in the notes and also in an email that's going to follow this webinar. So you'll have all the access to all those tools. I've also got a link to a property assessment tool, which is going to be your gold ticket to, this is, really just allows you to consider everything that you need to know when you're searching and inspecting a property. So it's not only about the bedrooms and the floor plan, what I was talking about before, but it's everything. Just, the hot water service and, the roof and the eaves and the fascia and all that stuff. So it just gives you a list of everything that, just consider it, have a look and, see if it's, if you're not buying a house, it's going to end up costing you $10,000 in maintenance when you move in. So we want to, eliminate that from happening for you. So how do you get to work with us? Well, this is where we want to show you how you can save you $10,000. So as a professional buyer's agent, my fees are $12,000 for the full service, which includes working out your brief with you. So sitting down and just nutting out that whole thing in full detail, working out and searching for that right property that's going to be right for you, then inspecting all those properties, then assessing the true market value of that property and what the real price is and what you're going to need to pay to actually buy that property, and then negotiating the sale. So that's the full service. And what I want to give you access to is all that information that you need so that you can buy the right property for the right price in my Buyers Academy. So what this is a great way where people, first home buyers, can actually afford to have that professional approach to buying property and, have all the tips and all the tools that they need to do it. So this is valued at $1,997, paid up front, or you can pay it over 5 months if you need to break it up into 5 components. And today I'm offering that first module for free for you, which is working out your brief in full. So I'm going to include the link for the registration of early registrations for this program in the comments and in the email. Or you can book a call session with Lisa and I, and we're going to include that link as well, where you can actually allocate your time, but those spaces are limited, okay? And that's a 30-minute call session with both of us where we can sit down and work out your individual needs. We've also got a Facebook group, which you're more than welcome to join. And what we're trying to do is build a community of people that need to buy a home, and we're there to support you through it and help you throughout the whole journey. Which is, we'll answer questions in that forum, and we'll just be there. We'll put information in there and just, be your point of call. So speaking of questions, we got a couple of questions earlier on that came through, which we really appreciate. So thanks for that. And the first couple are ideal for Lisa to answer. So the first one is, how much does a mortgage broker charge? Lisa, can you answer that for us?
Yes, our services are generally free. Often you'll find a broker might ask for a commitment fee, which will be generally reimbursed at settlement, just to make sure that all the work that they put in, and if you don't proceed, that at least they cover their costs. But generally what happens is a bank finds brokers actually cheaper to source their business, because if I submit a deal to for ANZ, for example, I'm going to make sure that I submit one that's going to get approved, because if it doesn't settle, I don't get paid. And then the bank, once it's settled, they pay the broker a commission, so a small percentage, so it's usually around 0.6 or 0.7%. So it's paid at the settlement of the loan. So generally, most brokers are generally free of charge.
Okay, that's great. And what's a pre-approval?
A pre-approval is the Bible. This is like the Holy Grail. This is where you present everything to me as you would a bank. I'll assess it on your behalf. We'll do all the work and find out which bank is suitable for you and which products are right for you, and you'll end up choosing the one. You have the final decision. I don't make it on your behalf. I will guide you though. Then we're going to submit that application for a pre-approval, and it'll come back and it'll say to you, I am able to borrow, say, $500,000, subject to a contract of sale, evaluation, and maybe some insurance or something. That means that you can go to auction and bid for that property, knowing full well that you're going to be able to obtain those funds. Because when you buy at auction, there's no getting out of it, and we don't want you to lose your deposit. And it's the same with a private sale. It gives you more negotiating power, knowing that you've got your pre-approval there. So we generally like you to say subject to finance. However, if it's, as Lisa will attest to this, if there's 3 buyers in the market and you've got your finance approved, your pre-approval in place, we could probably drop the subject to finance off, and that will make your offer stand out compared to those other two that are still got to wait for finance.
Absolutely.
So
that would really strengthen the offer. So if you do that, absolutely. Have you got any questions for me, Lisa, that you can fire?
What are some of the questions to ask an agent at an inspection?
Oh, that's a good one. Yeah. So if you go to an open for inspection and it's actually a property that's on your list that you're actually interested in, then what I would recommend you do is introduce yourself to the agent. And, you know, whilst I don't want you to show all your cards at this point in time, just make yourself known that there's a bit of interest there, because you don't want to, you know, have the property sold without you even being contacted, which can happen. So make yourself known and just ask some questions. And look, some of the ones that I would recommend would be, you know, what sort of settlement terms is the seller, you know, preferred? So this will give you an indication as to whether they're in a situation where they want a shorter settlement. You know, they may have already bought something and they want a short settlement, or they may want a longer settlement. So if you can sort of attain this at the start, then again, that's going to help strengthen your offer if and when you get to that point in time. Another great question I would always recommend you ask is there any issues with the home that you're aware of? Because legally, an agent is obliged to have to disclose any information that he is knowing about the property. And yeah, that's a legal requirement, part of their ethics.
What about another one here is the advertised price the amount I need to offer?
Another good question, because the advertised price is not the vendor's reserve price. And what this means is the advertised price is the agent's opinion of what that property could sell for in the market. And that's normally based on comparable sales, if there are any. And they do have a statement of information now that shows those comparable properties. And then they need to list 3 that are within a certain perimeter of that property and have sold within the last 3 or 6 months. But that's not always available. So when it's not and there's no comparable sales, they have to come up with their idea of what the property could sell for, and that's what that advertised price is. So it can be used as a marketing tool. And, you know, I see this time and time again, when, particularly in the first home buyers market, where a property is listed at 550 to 600 and ends up selling for 750. You know, it's frustrating, to say the least. So that's where you need to do that property assessment, so you actually know what the property is going to sell for and what you need to be in a position to buy that property.
Another one is, what is an off-market? I'll start again. What is an off-market property? What does that mean?
Yeah, so another great question, Lise. So an off-market property is something that actually is not advertised, okay? And whilst probably, you know, before COVID, an off-market property, and whilst, you know, there are some sellers out there that don't actually want to spend that money on advertising and they would try to sell their house off-market, generally speaking, off-market properties are probably not the ideal property, but there are still opportunities out there, and that's where a buyer's agent can really help, because, you know, I've got access to those resources with the relationships I have formed over the years with agents. They always send me the properties that are coming up that haven't yet been advertised, so we can sort of get in beforehand. And a lot of agents are using that strategy right now because of the conditions that we're dealing with, where I guess it's a way of doing a listing now with a seller. The agents are recommending that, well, let's test the market. Let's see if we can find you a buyer by contacting all of our database. And fortunately for you, as a buyer's agent, I'm part of that database and I get all those listings emailed to me regularly, daily. So yeah, that's certainly something that is predominant at the moment, more so off the market.
And the last question that I've got here is, do I need to put an offer in writing?
Yes, I would always recommend you put an offer in writing. So a verbal offer means nothing at the end of the day. And you can actually use that as a real powerful bargaining tool Okay, so a lot of agents will stand back, and particularly if a property's just come on the market, and you're trying to get a feel and say, okay, well, I want to buy this property because there's not much on the market at the moment. And the agents can sometimes use this against the buyers. Okay, so they'll try to get a real indication of where you see the value sitting in that property, and then play that off against the other buyers. Okay, so to stop that from happening, I would always write it up. Okay, write it up on a contract of sale, and that's where you need that professional help and that professional support to be able to do that. Write it up on a contract of sale, and by law, that agent has to show and bring that to the seller. And then you're dealing, that you're actually dealing with the seller, that the feedback that you're getting is coming from them and not just the agent trying to play you off against the other buyers.
Great.
And have a time limit on it too. Sorry, but yeah, have a time limit on it. So, put the offer in and say, this offer expires in 1 day.
Okay, another one here. So when an agent asks you where the property value is at, how do you reply? So if they're asking you where the property value is at, like as a buyer, what do you reply? Like what do you? What's your negotiation tactic there?
Oh, so if a buyer asks me where the property value is at,
I think, sorry. It says, so when the agent asks you where the property value is at, how? Oh, so if the agent asks the buyer.
Yeah, I get exactly what you're asking.
We get there.
Yeah, and this is a tactic. This is a tactic that a lot of agents use, and they say, well, where do you see the value sitting in this property? Because they're trying to get a gauge that they can sort of go back to the seller and say, this is where the interest lies. Okay, so. This is where you need to have done your research and have a pretty good understanding of where the market is and what similar properties are selling for. But that's where you can sort of smash it back to the agent and say, well, based on your statement of information, because it's up to the agents know. They're not looking for you as you're the professional. They know. So slam it back to them and say, well, aren't you the agent? What does a statement of information tell you? What are the comparable properties? Can you tell me what else is sold that's comparable to this? So, try to get a little bit more feedback from them and turn it back to them and say, well, you've advertised it for 550 to 600. Is that realistic? Are the sellers realistic? Will they accept an offer within that range?
Beautiful. I think that answered that nicely. Okay, well.
Thank you.
I don't think there's any more questions.
I've actually got a question.
Oh.
I want to know, Lisa, do you wear heels?
I'm financing heels that wears flats or in COVID wears boots.
Oh, the old COVID mockies. Love it.
Been caught out. All business up top, party down the bottom.
We're all getting very good at that, aren't we? And hey, it's winter. It's been really cold this week, so I'll let you know with that.
Well, we wanted to say thank you so much for joining us today. You will receive an email after this with all the links and things that we've gone through, because we know that it's an awful lot of information to take in. Sure, we also know that this is very overwhelming process for first home buyers. So thank you for joining us. Don't forget to book in the call to speak to us. We're happy to help you with any questions that you might have.
Yeah, and join the Facebook group if you've got any other questions. Give you an opportunity to connect with us even more and get a feel of where we're at and how we can help you. Because at the end of the day, that's what we're so passionate about. So thanks so much for joining. Is there any other questions?
No, I think we're all good.
Yeah, thanks, guys. Been wonderful. This is fun.
All right, I'll see you in the Facebook group, guys.
Yeah, look forward to it. Bye, everybody.